struggling with the proper asset management procedures for your multifamily, and it's just a giant headache that is waiting to explode because you can't get it right and you have tons of vacancies, tons of repairs, and you're pulling your hair out on the property management side and the operations and the asset management piece. Here are some key things that you should be focusing on when you're managing your multifamily building to be able to successfully manage it efficiently, be able to create a passive cash flow stream so that you can actually go through and retire off of, and a consistency that you can count on. Okay. So the first thing you need to understand is you break it up into property management efficiencies and asset management efficiencies, and some of the things that you should be looking at on a daily basis or monthly basis to make sure your building is operating correctly. So the very first thing that I would say when you're talking about the property management side is understanding your accounting. Understand what things are happening on your property. What is your budget versus actual? What is actually happening on that building? Do you have proper accounting procedures when it comes to the management side of things? Does the property manager know what they're doing and have the right accounting team in place that aren't making tons of errors or mistakes or not reconciling things correctly like they should be when they are managing your building and causing more headaches by not having the right team in place? So the next thing on the property management side is the collections. So what are their operating procedures when you're doing collections? How often are they calling? How much are they documenting everything? At what point do they send them to eviction? Are they giving leeway in certain cases, and why? Do you agree with that leeway, or are you more the type that wants to evict no matter what with a month behind, or a specific situation where every single time someone's a month behind, you start the eviction process? What are they doing with regard to those collections to try to get them to pay? Are they setting up payment plans? Are they making it easy to be able to pay for them? Are they, finding out what dates specifically that the tenant is saying that they will catch up and make that payment? Or are they kind of leaving it to the wind and saying, oh, the tenant said that they'll catch up and we believe them, but they didn't get a specific date. They didn't get detail. They didn't make them sign a document that says, hey, I will come in and make this payment on this date, so that way that they avoid eviction from doing that. So there's specific techniques and tools that a property manager can do when they're trying to do efficient collections, obviously using tech, auto reminders, consistent communication with those tenants, of course, as well as with the investors to make the right decision with regard to that building as well. Okay. And then you have service calls. This could be a big problem for a lot of managers. If they are vertically integrated and they have the construction team in-house, usually it's a little bit better, a little bit more communication. There's a little bit more accountability there because they have these inside vendors that work for the managers. And if they mess up, then it's typically on the managers, or the fault of the managers in that case. And that can be great for getting on the call people, getting out there quick and getting these service calls done, which is super important for the tenant's happiness, which makes it so that they stay in your property longer if they are happy, right? So understanding the service call piece of this, or are they going out to outside vendors, which might take more time? They may not have the team in place to handle every issue that comes up at the property, and that could be a big issue. There could be additional costs involved when you're dealing with an outside sub where they have markups. It might cost a little bit more than an in-house team where you kind of already know what the cost is going to be for certain types of service calls. So, speaking of service calls, one of the best things that a manager can do is implement a tenant retention program. And that's little things like proper communication, making sure every year that all the preventative maintenance items are done on the property, making sure that they have an online portal, things are easy to pay, doing little things like if they've never been late, getting them a gift card to the grocery store, or, birthday cards or Christmas cards, and little things like that to, add value. And they also won't go through and trash your unit if they really like you as a as an owner or as a management company. So implementing some of these little things to help keep tenants in longer can be absolutely valuable. Now, it's a happy medium between rent increases and keeping them there. Of course, you got to be real careful and slowly raise rents over time to market. You don't want to be stuck where your rents are really, really low and you have a big increase, and so therefore they are going to move out. You want to do that gradually over a period of time so that they don't move out, unless you're going to renovate that unit and really, really ramp up those rents because you're going to renovate the property or something along those lines. So the next piece after service calls, the tenant retention program, is the communication with not only the owners of the property, but the tenants as well, and the cities and city notices and the eviction attorneys, and proper communication all around. Do they have a team that's dedicated to marketing and leasing, dedicated to service calls, dedicated to the investors, or dedicated to handling city issues and things like that? Or are they a small mom and pop shop that has multiple, one person wearing multiple hats there? And sometimes in that situation you could have some lagging communication, mostly because they're just overwhelmed and doing a lot themselves versus having an integration of multiple team members and multiple departments for a little bit bigger of an outfit. Okay, so that communication can be key. You want your investors being answered correctly, timely. You want the tenants being answered timely for proper tenant retention. All these things add to the efficiency of running the operations of the building in the first place. Okay, and then you have the leasing side of things and the marketing side associated with that leasing, and that is absolutely imperative. If you're and also being able to make sure that you are properly timing your marketing. If someone says they're going to move out by a certain date, you start to go market that unit as available maybe 2 weeks after that date. So you have time to get in there and do the rent ready. The really good property managers can be ready with a rent ready estimate, typically the day after move out. They can start that work the next week or that week to be able to kick that thing out while they're marketing for that unit the entire time, even before the tenant was moved out, and then being able to go through and get it rented way faster because of those types of procedures, and marketing it way over here and having it available at a future date, and having your rehab teams lined up so you can get that thing up and running and off your plate as fast as possible with regard to that vacancy, and you want it occupied as fast as you possibly can. And being able to make sure that on the leasing side you have it on all the right platforms to be able to get the most exposure. Is it just on the property manager's website? Is the vacancy also on the MLS? Is it all on Zillow and Redfin and all the different online sites that you can go to, apartments.com and everything else? There's aggregator sites that'll aggregate it to all these places. What about Craigslist and advertising sites like that? So these things are all imperative to understand when you're dealing with the property management side of things, to see if they are efficient or not. Also, do they have the proper metrics on their leasing and marketing side where they know how many showings they've had, they understand the feedback, they know if they should be dropping rents by a certain date. All those things are absolutely key for proper marketing of your listing in the first place. Okay, so those are the key attributes associated with the operations on the management. And then you have the oversight of those management over here in the asset management component of this. And so in the asset management side, you're primarily reviewing the budget versus actual and understanding what that budget is versus what you are actually making, and is that hitting projections, and why is it not hitting projections? What does the collections look like right now, and the vacancy rate? Those types of things are really, really big keys to track as far as your key performance indicators, to know if you are operating efficiently or inefficiently across the board. So also issue and problem resolution. Did you get an incorrect notice from a city? Did you get notices from the tax compliance side? Do you have certain repairs that you need to make a decision on for the property manager? All of those things that go into, of course, the problems that come with real estate that are there inherently in the business no matter what. This is one of the reasons we sold our property management company, because I didn't want to deal with that many tenant problems. And whenever you're dealing with houses or you're dealing with apartments, you're dealing with issues that come up. And so it's much easier to manage the managers than it is to actually do the work on the management side specifically. And then doing the accounting review, making sure there's no discrepancies on the management report, making sure you really understand what the delinquencies are and those collection efforts on specific tenants, and what the action items that they've taken, and what the next steps and dates are for those specific action items, so you can check and balance and make sure that management company is actually doing the operational procedures they told you, and is doing that work correctly to get these things rented up and running, or get the collections taken care of, or get the service calls done in a timely manner across the board. So then you also, on the asset management side, have the capital management, the actual cash management for the entire portfolio. Do you have CapEx, your capital expenditures that are coming up on your roofs and plumbing and electrical and HVACs and all the major systems put aside every single month for those major items that are coming up? Or did you put them aside up front for those items before you even purchased it because you know it's an upcoming expense? Do you have the proper cash flow management for your property taxes and your annual insurance that's going to come up, and you're putting money aside for those items? So being able to put a reserve aside out of the cash flow every month for your CapEx items, for repairs, for a vacancy allowance, as well as some of those other, specific insurance and tax issues and reserves, is absolutely key to being able to have a consistent cash flow stream. And most mom and pop owners, they think, oh, we're doing great, we're getting great cash flow, and then all of a sudden they have $100,000 or $50,000 worth of major repairs on their multifamily building, thinking in their head this doesn't work and they're not making any money. Let me go sell the building. All while the only reason they're feeling that way is because they didn't put aside that money allocated every single month for those major up and coming items that will come up always on your properties. And so being able to make sure you do that gives you that even cash flow stream, so you don't feel like you're caught by surprise by major issues that come up like that. Okay. So next is understanding lease end dates, which kind of goes into the leasing as well, and making sure that, hey, 3 months before that lease ends, you're reviewing market rents and saying, hey, should we increase rents to market? How do we go about doing that? Is it way below market or just a slight increase? Should we do it this year or should we wait a year? All of those things need to have a decision behind them. And timing your lease start dates can be absolutely a key for efficiency, because you do not want a vacancy, especially in the Midwest when it's cold and rainy and things like that, or places where there's snow. You don't want a lease coming due anywhere near September, October, November, or December, because those are really, really hard to lease properties during that time. People don't like to move when it's snowing outside or it's pouring outside. And so being able to make sure you time your lease dates to say, hey, this time this lease is not going to be a 12-month lease. I might do a 15-month lease, just so the lease end date starts in January, February, or March. So if they go move out at the end of their lease, then you have a vacancy in January, February, or March, which is much easier to rent. Everybody's getting their tax refunds at that time. If there is any this year, they're getting their tax refunds. And being able to put those security deposits down and that kind of thing with those tax refunds really helps to get those things rented across the board. And then understanding your exit strategy. So annually, biannually, or quarterly, reviewing your value of your property. What would happen if you were to cash out? What is the current return on your equity in that deal? Does it make sense to sell that building, or does it make sense to hold it and increase efficiencies across the board? What are the things that you should be doing as far as the review and reviewing market rents? You should be reviewing market values, what your actual net profits would be split with you and your investors, to determine should you actually sell that building. And you should be looking at every single year to understand what the highest and best use of the capital is. So making sure also from the asset management perspective that you have proper investor communication. I can't stress this enough. To point out the return on investment analysis, have proper reporting showing the financial statements and backup as far as what's going on the market. Being able to communicate properly with your investors and ask those questions helps them to be able to feel comfortable investing with you for the long term and keeps them around, building that trust because you're educating them across the board about what's actually happening out there in the market because you are the one operating this and seeing what's happening. And then it comes down to the final item, which is the federal and state tax return management, as well as the K-1 management. When you're dealing with this, you can outsource that to other CPAs, but still managing that distribution process and the online portal that goes with that, potentially, if that's set up with an online portal, can be key when you're working with other investors involved. So if you follow some of these tips and tricks, you will be a much more efficient property manager and asset manager, and your property will be smooth sailing across the board as long as you put those items aside and you follow the proper procedures and review these things on a quarterly basis for issues and resolutions that can come up. So if you guys like this content, please like, subscribe, hit that notification bell. You can always find us as well at becomearealestatemaster.com. Thank you guys so much. I appreciate it and look forward to talking with you guys soon.